Hi, I'm David Bassanese, Chief Economist with BetaShares, one of Australia's leading providers of exchange-traded funds. Here's my global market outlook for the month of July. So what happened last month? Global equities were weaker over the month of June, which largely reflected a sharp two-day slump in reaction to the surprise Brexit vote on June 23. That said, markets had by month end largely recovered most of their losses, as, after more careful consideration, investors concluded, correctly in my view, that the negative impact of Brexit would be mainly felt by the UK economy alone. In that regard, it's worth remembering that the UK now accounts for only around 2.5% of global GDP. Brexit also caused bond yields to drop further, with the yield on 10-year Australian government bonds touching a historic low below 2%. Lower interest rates helped boost fixed income markets, and most particularly returns from the local listed property sector. With Brexit fears having eased, markets now face several challenges. For starters, the risk of high US interest rates could quickly come back on the agenda, given that the US economy is likely to shrug off the effects of Brexit. Secondly, share market price to earnings valuations remain elevated despite continued sluggish earnings growth. Against this, in a classic case of bad news is good news, weaker Chinese economic growth of late could support commodity markets if expectations of yet another round of Chinese policy stimulus continue to build. Overall, in view of soft global economic growth and high equity valuations, I still advocate a cautious stance with regard to risk markets. To get a full copy of my global market outlook, please see our website. Thanks for listening, and I'll see you again next month.